Hello, this is Chuck Carnavan. I'm the Chuck in the Markets Up Chuck, and today's blog was titled "No Place Like Home." There's a lot of forecasting that due to the recession and the current environment coming out of the recession, that the Futurist.com, according to an article in Trendletter magazine, forecasts that home remodeling and home expansion is going to be much stronger than actual new home sales. And if that's true, then obviously companies like Home Depot should be great beneficiaries of that. So I thought it'd be interesting to take a look at Home Depot from the point of view of where it stands as a long-term investment based on valuation. When you look at the 15-year chart of Home Depot, the green line is the earnings. I want you to notice Home Depot had very excellent earnings growth, up through 2006, and of course flattened in 2007, and then dropped in 2008, and is expected to drop again in 2009 before it begins to recover in 2010. But I want you to also notice how stock price followed the earnings. But according to current forecast, they're looking for 10% growth going forward. And if that's true, then Home Depot could be a good buy at these prices, especially if the Futurist is right. You get a 3.3% dividend yield. The stock is trading at 17 times depressed earnings, but the real question is, what are the earnings going to be, assuming that the Futurist is correct and home remodeling is where the future is. Very similar, you can look at Lowe's Corporation. Here you've got about the same valuation as Home Depot, a little lower dividend yield, but once again you've got a very similar pattern. The stock price kind of followed earnings, then fell with the recession as the recession came in. But again, the question is, even though the PE shows 17, that's really on depressed earnings. This is a company that earned $2 a share just a few years ago. It's currently forecast on $1.34. What's the future going to look like? And the numbers, according to consensus estimates, are about the same as for Home Depot. If you want to take a little more of a flyer, a smaller company that you might want to take a look at is Lumber Liquidators. They make, they offer hardwood floors. I'm sure a lot of you have seen them. They have no debt in the balance sheet. They're a very small company, but I will point out that they've rallied very strongly in this market, and they're currently trading at a relatively high price earnings ratio. They do have the fastest growth rate, but you got to pay dearly to buy that growth rate. So, there is no place like home, and if people are going to be remodeling their homes, maybe it's time to take a look at these companies again. As always, I suggest you do your own research, but I thought it'd be interesting for you to look at these names, these old stalwarts in many cases, from the standpoint of their fundamentals based on both the history as well as the current forecast. Lowe's and Home Depot, of course, are two leaders in the industry, and might be very interesting candidates for long-term investment at this point. This is Chuck Harmos, and I hope you found today's presentation interesting and insightful, and I look forward to talking again tomorrow. Thanks for listening.